money on my mind, 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 money on my mind. So money is all I think of. Money on my mind, money on my mind, money on my mind, money on my mind.
Alrighty, you guys, it's another episode of your favorite financial focused radio show, podcast, whatever you want to call it yourself. This is Financial State of Minds, the show where I help you get to that bag, manage that bag, and grow that bag as best as possible through me educating you on the world of business and finances with my literacy. So I always want to thank the radio station you are listening to right now, KGPC 96.9. You may be listening to on the broadcast right now. You may be listening to it at kgpc969.org, or you may be listening to it on your favorite streaming podcast platform of choice. Either way, thank you for tuning in for another episode of goodness. So what are we talking about on this episode today? We're going to talk about probably the number one question I get asked being a business consultant who focuses on finances, being a financial coach. And what is that question? Well, listener, that question is, what is the best way, the best strategies to repair credit or build up my credit? It's the number one question I get as a financially savvy person. So let's just get into it. I'm going to talk generally, but this is going to be a short episode, another 30-minute episode, but this is going to be expanded upon greatly in multiple different episodes. I'm just going to give you the base knowledge you need to know now, and I hope you guys check in with me in the later episodes because I'm going to lay out the options, the strategy in much more detail on future episodes. But without further ado, let me just get right into it. How do you repair your credit, or how do you just make it better in generally? So I frame it that way to first off let you guys know off rip, this strategy can be applied for anybody at any credit score. I don't care if you have an 800, I don't care if you have a 300. You can use all of these techniques, but these are obviously geared for people with very poor, bad, subprime, whatever you want to call it, credit. I'm going to frame this as somebody who has a credit score of like 500 or lesser. We'll say 600, no, 500 or lesser. I'm rocking with 500 or lesser. But if you're in the 600s, you can use this strategy. Again, if you're in the 700s, you can use this strategy. 800s, you can, but there are other better options you can use too. But again, this is designed for people who are trying to repair their credit, who have bad credit, who have no credit even. Because a lot of people don't know, you generally do start off with no credit. All right, so how do we go about this? Usually when you have a credit score of like 500, stuff happened to where, you have that credit score. Stuff was not getting paid off. Stuff was getting let go. Everyone's situation is unique. I have a client who literally got into 2 car accidents back to back, couldn't pay the loan back. People go broke all the time because of medical bills. People are in debt because of student loans. People are in debt because of credit cards too much are racked up. We all have personal different situations when it comes to why our credit score is just hurting. So there's really 2 options. We got to pay that debt down, or we got to file a bankruptcy. Generally speaking, when people ask me, a couple of people ask me, Darrin, should I file a bankruptcy on myself to discharge all my debts? I almost always say no if you can make payments. If you can make payments in your space right now, in your situation right now, do not do bankruptcy. I mentioned this before. One of my favorite clients, she has a bankruptcy, and it's very difficult when you have a bankruptcy because your options are very limited. Again, let me say that again. When you choose to go down the bankruptcy route, your options become very limited, and things just take a while. It's not impossible, but things take a while when you decide to go the bankruptcy route and you discharge all your unsecured debts. And that's one thing people need to know about bankruptcy. you only can get rid of or make the unsecured debts go bye-bye. So unsecured debts, which is generally your credit cards, personal loans, debt consolidation loans, stuff like that, medical bills, those are things that go away. Now, one last thing about bankruptcy, because I don't want to spend too much time, eventually I'll make a bankruptcy episode, is because I just really want to emphasize this for people who are trying to pay off their debts. Bankruptcy does not get rid of your secured loans. So if you have a house, if you have a car, anything that is put up as collateral is considered a secured loan. And what I mean by collateral is if you have a loan where if you don't pay it, they're going to take something away, that is a secured loan 99.999% of the time. Those types of debts do not go away in a bankruptcy. What also doesn't go away is student loans. What also doesn't go away is federal and state taxes, and anything where things are getting garnished for those, and child support does not go away when you file for a bankruptcy. Just general information for you guys. That's why I tend to support this paying stuff off, making payment plans and stuff like that. So the first thing you're going to do before we actually talk about the strategy is we lower expenses. Obviously, if you can't pay stuff, you're having trouble paying your bills, you're in severe debt, it's because you're spending too much money. Probably because you're not making enough, but if you are making a decent amount, you need to lower your expenses. This is stuff I've talked about before, but I'll just go quickly. Get rid of your Netflix bill. You don't get to eat out as often, if not at all. Any luxury items, you need to just stop buying it. Do that. 2, see if you can lower or find alternates to reoccurring bills. So again, if you have cable at the highest package level, go down to the basic package. If you have the fanciest iPhone, you may need to sell that fancy iPhone and get the iPhone model from 4 years ago so it's paid off and that reduces your bill. Do things to have the same need met, but it's not so expensive. So let's assume you've done all that. Then you're just not making enough money. You got to find a way to make enough money. So that's a totally different thing. I've made multiple episodes about opening up a business, side hustle stuff. You can DM me at Financial State of Minds on my Instagram to help with that and kind of help, get a free business consultation regarding me, how I can set you up. But you need to make more income. And it doesn't have to be a business. Go get a second job. That's actually what I tend to recommend for people with low credit scores. Just go get a second job. Go drive for Uber a little bit. Go DoorDash. Go work at a store part-time. Go get a second job if you don't have a full-time job already. You just need more income. If you have more income, you can, and you won't be in a situation, most likely. So say you did all that, okay, you're still swimming in debt. Or maybe you got to a point where your income is meeting your expenses. Regardless, you're still trying to work on this debt. You still got to pay these payments. Another thing you can do is make sure the actual payments, are getting lowered if you cannot come up with the funds to make these payments on anything that I mentioned. Maybe you want to take advantage because you were paying on time. You did have good payment history with bills, with utilities, with credit cards. Explain to them your situation. You're having cash flow issues. Your income is short right now. They may lower your bill. They may allow you to skip a payment, whatever. Do all those things. Now, more about things that are in collection or on your credit report. Go ahead and call these places up if they're on your credit report and literally be like, negotiate with them to see if you can overall lower the debt if it's in collections, because they will work with you. And I've talked about that in previous episodes. And if you see an error on your report, which I think it's a quarter or a third, one of those two, a quarter or a third of all credit reports have some type of error. And this is how things work. If you call that lender or that creditor and they cannot prove within, I think it's either 30 or 60 days, I always forget that time frame, let's say 60 days to be safe, that is not your actual debt, they have to, by law, get rid of it or discharge it off of your credit report. So go ahead and do that. A lot of times these companies, especially if it's not a lot of money, they won't take the time to prove it to the credit bureaus, and they'll just goes away off your credit report, and you're already good to go there. These are all credit repair methods in my opinion, but you want to do all this first. So you've done all that. Maybe you're able to get some bills off, maybe you weren't, but you're still lying with significant debt. Significant could be $5,000, $10,000, $20,000, $30,000, whatever. You still have a lot of debt. So your credit score is still shoddy. So what you can do is some of these options. There's really 2, maybe 3 options, however you want to look at it. If you have a credit score of 500, then you need to have what is called a credit building either card and a credit building account for an installment loan. You also, if you can, need to get a secured credit card. For those who don't know what a secured credit card is, I will explain that right now. Okay. How do secured credit cards work? Well, let's talk about how unsecured credit card works, and then we'll talk about secured so we're all clear in the air. An unsecured credit card is literally when you go to a lender like Bank of America, you apply for a credit card, you're approved, you start with $1,000 credit line, and you can use it freely. And as long as you pay them back and you're good, you get to keep the card forever. It's a revolving line of credit. That is what people can normally get if their credit score is even fair. But once you get a credit score that's kind of poor, it's bad, then you are not generally approved for those cards. So you have to get what is called a secured credit card. And like a car loan, like a home loan, it is a type of credit card to where you have to put down a minimum deposit. And usually that minimum deposit is where your starting credit line is. And then they hold on to that deposit because it's their security. It's secured, meaning that if you don't pay that credit card off, or you default on the credit card, you don't get that $200 back, or you don't get that $500 back, whatever you decided to put down. So what happens with a secured credit card is you put down, let's say $200, and then now your credit line is $200, and then it works that way. And then as time goes on, you're doing what you're supposed to do, which is pay your balance in full on time every single month, and then they will increase your limit. But they're still holding on to that $200 you initially put down. So now you have a $500 limit, you have a $1,000 limit, you have a $1,500 limit, you have a $2,000 limit. And depending on the lender, what will happen is at some point, a lot of secured credit cards, you will graduate or you will upgrade or will convert from a secured credit card to an unsecured credit card after a certain amount of time. What is that certain amount of time? It depends. It's different, and it depends on the lender. Just to throw out time frames, because I know you guys want to have to hear it. It could be 6 months. It could be 9 months. It could be a year. It could be 16 months. It could be 24 months. It just depends on the lender. But I would average and say for credit cards, I would say 6 months to a year is the average. But again, it could be all over the place. So that's your goal with the secured credit card. And what's going on is it's a secured credit card. So it's reporting utilization rates and it's reporting payment history rates. And of course, it's a different trade line. I'll explain what a trade line is quickly. A trade line is just anything where it's being reported to the credit bureau. So that can be a car loan, a home loan, a credit card, medical bills, whatever. It's being reported to the credit bureau. And that's increasing your credit score and repairing your credit score at this point if it needs to be repaired. The reason why credit cards are so powerful is because utilization rate and payment history makes up 65% of your total credit score. So you're really helping yourself out with your credit score when you use a secured credit card. The downfall to a secured credit card is the following. Now you ain't getting that information yet because I gotta tell you guys, you're listening to Financial State of Mind, your boy Bookity Blondie himself, Darrin Harvey, Mr. Finance, on KGPC 96.9.org if you're streaming it, or you're listening to it on the radio, 96.9 FM. Thank you. So the cons to a secured credit card is that they have APR, they have interest rates. The really good secured credit cards start around somewhere between 17 to 20% right now in this market at this time of recording. Some of them get crazy. Some of them crazy, they can go to 30% plus. And a lot of secured credit cards have annual fees. The good ones don't, but a lot of them do. So you're still gaining interest if you do not pay that balance off in full. And again, it is requiring that secure deposit. So what about if you don't have $200 or you don't want to spend $200 to rebuild your credit for whatever reason? Then you can go down the credit builder route. So I mentioned it earlier. There is something called credit builder accounts, whether they're attached to a debit card, a credit card, or a loan. I plan on going into detail with this in latter episodes, but just generally for you guys to understand, this is how it works. And it varies different by service to service. That's why I want to generalize it right now. So generally speaking, when you have a credit builder account with a card, whether it's a debit card or a credit card, usually it's a debit card or a charge card or something like that, what happens is usually you put your money into a separate account. Sometimes this account can be attached to your bank. Sometimes it's within the service itself because they're like a hybrid bank or not. It just depends on the service. You put your money into this account. Matter of fact, I'll just give you guys a real example. Let's talk about Chime. Chime is a credit builder service where it is attached to a card. So this is how Chime works. Chime, you open up a Chime checking account. You move, let's just say in this conversation, $2,000 into the Chime account. Chime will go ahead and give you a Visa Chime card. And what happens is you're literally front loading that card. Let's just say in this case, you're front loading $500. So then you're front loading $500, and then that's essentially your credit limit. And then you spend that $500, and then at the end of the month, that checking account that you had is used to pay off the $500. And it's essentially, imagine it like a gift card. That's basically how it works. It's like a gift card. You spend your own money to activate the gift card, and then that's your credit line, and there you go. So after that, after the month is paid off, then that payment is reported to the 3 credit bureaus, which is, of course, Equifax, TransUnion, and Experian. You keep doing that, and your credit score increases because it's reporting that positive payment history. This doesn't require a security deposit in the sense of they're literally holding your money until you've converted it into an unsecured credit card where it's given back. Your security deposit, quote unquote, is whatever you put in. So it's different. And the minimum is usually lower. The minimum, I think, for Chime is like $100, but it could be whatever you want. So that's the kind of uniqueness between these credit builder accounts, is there's going to be no interest rate. There is going to be no real hard increase sent to your credit. So it's not going to affect your credit negatively. Some of them do soft pulls. Some of them literally just don't check at all. It's instant approval. And there is no annual fee when it's associated with Chime. Usually these services are not free. You have to pay a monthly flat rate, or sometimes there's an annual rate. It depends on the service. I believe with Chime, it's a monthly rate. I could be wrong. But yeah, these things are not free. You do have to pay something. That's how they're making their money. But the idea is what you do is you get a service like Chime, and they're building your revolving line of credit profile history. And then you get a service like Self, which is a credit builder installment building tool. So basically, if I remember this correctly, I'm going to go into more detail on a separate episode. It basically acts like a CD account where literally you're putting money into a savings account that is set aside. And that money that's being put in on a monthly basis is being reported to the credit bureaus as paying off an installment loan, therefore improving your credit score in that category. That's how these things work. There are literally dozens and dozens of services that do that. But you use these services when you're in like the low 500s, because obviously you can't get approved for an unsecured loan. You can't get approved for a personal loan. You can't get approved for stuff like that. Now, if your credit score is a little bit higher, like if it's in the high 600s, then you want to do all of that and then just get yourself an unsecured credit card and make payments like that. And if your credit score is in the 700s, then you're going to want to get a debt consolidation loan, consolidate all your debts that you currently have into one loan and just pay that off, so you're reducing your debt. This is the concept that a lot of people don't understand, though. And I kind of said it earlier, but I kind of want to focus on it now. The fastest way to build credit in general, regardless of where your score at, is to have as many trade lines as possible, and you're paying every one of them. So you want to use, if you can, use multiple credit builder accounts. If you can, get multiple secured credit cards if those are your only options. If you can, because your credit score is a little bit better, get multiple credit cards and just pay it off. If you can, because your options allow for it, get installment loans, pay it off. If you have a car, continue to make those payments on time. If you have a home, continue to pay those payments on time. Payment history makes up 35% of your credit score. So there's nothing more you can do that is better for your credit score than to just pay your bills on time without fail. That's why I always say that line, because it just makes up the most of your credit score. But when you have all these things going for you, you are showing the credit bureaus that you're able to pay every type of loan, and they will love you for that. That is why your credit score will go up. And if you're able to do multiple things at the same time, then that improves the speed of your credit score being built up. This is generally how you repair your credit score, along with the beginning, where you want to reduce your spending, you want to get your higher income, and you want to get things off of your credit report that are negatively impacting your credit score. This is how you repair your credit score in a nutshell. Another quick thing that I totally forgot about is you can use a service called Experian Boost. Yes, that Experian, the credit bureau. What Experian Boost does is you sign up and it's completely free. So everybody should be using this. Everybody needs to go on Experian, and what you do is you create an account, and then first off, Experian offers free credit reports. You should be doing that once a year, and you need to be looking at your full credit report when you're in a situation like this to begin with. There's other websites like annualcreditreports.com where you can download your credit report for free. I believe every bureau offers one credit report a year for free. If you have any credit card with Bank of America or any major lender or any major bank or even the small banks, they'll allow you to get credit reports for free. They'll allow you to monitor your credit report, monitor your credit score, which is something you need to be doing actively when you're repairing, or you should be doing actively if you have an 800 credit score. Sorry, went on a tangent. So Experian Boost. So you sign up for an Experian account and you go online, and there's going to be a service called Experian Boost. And all it is that Experian will check your checking account that you provide for them, and anything where you're paying a bill. For the most part, utilities. For the most part, it's PG&E, water bills. I'm trying to remember if it was a water bill or not. Definitely PG&E, definitely your Netflix, definitely utilities. A lot of qualified services, they will actually report that as positive payment history to their own bureau, Experian. That is a free service that takes literally 15 minutes. If you guys want, I can make an episode on how to help you guys get that set up. But it's super simple. It doesn't take long. You can go ahead and YouTube and Google it if you want that step-by-step hand holding, but it's really simple, and that's an easy way to improve your credit score. I've had clients and I've read of stories where people got literally like 50-point boost on their Experian side because they just simply took advantage of that. There are actually credit builder services where they will also do that for you. Well, they will report utilities. They will report reoccurring expenses like Netflix, and the latter maybe not YouTube, Uber One, Uber Pass, whatever it's called, as positive payment history. So there's a whole wealth of ways to improve your credit score regardless of your income situation. The only way you can't really improve your credit score is if you just don't make money. And if you don't make money, then you have to find a way to earn an income. And if you have, everyone has their own situation, but you got to do it. You cannot improve your credit score or your credit profile if you do not make money. That is something that is clear. And if you're trying to repair your credit score or your credit profile overall, you have to pay down your debts. If you choose the bankruptcy route, you're still, and you own a car, you're still going to have to pay the car off anyways. But you do not want to go down to bankruptcy unless it's your absolute last resort and you really aren't making that much money. That's my opinion on that, at least. That's pretty much it. That's all I want to talk about for right now. We're going to go really in depth with the credit builders. Everything I said actually technically can apply on the business side too. I'm going to make a dedicated episode where I'm literally doing the same thing for all the business owners out there. And lastly, I want to leave off on this with the business part too. You can use this to start building business credit. Basically, literally, they offer similar services, the credit builders, the loans, the credit cards, all that. They offer it on the business side. So a lot of people who are interested in starting businesses, or they're in business, but they don't have credit scores, which is why you're not getting approved for loans, which is why you're not getting approved for credit cards. You can use credit builder services to start you gaining or building your credit, your business credit. Look out for that episode too. This is something I work with my clients all the time. And this is how literally I was able to help my client who's in business and has a bankruptcy. Through credit builder services, secured credit cards was her first step in making sure she pays her bills on time, like her car and like other utilities and stuff like that. What I kind of pitch to people if they want to be a business owner and they're worried about money is you can get access to the funding you need, generally speaking, for a business regardless of your personal credit history. The difference is if you have a credit score of 750, you can get the funding a lot quicker. You can get the funding a lot quicker when you have a 750 personal credit score compared to somebody who has a 550 credit score. The 550 person can definitely get lending. It's just going to take a bit longer than the person with 750. If you're thinking about opening up a business, first off, DM me at Financial State of Minds. I am a business consultant who focuses on helping businesses find funding. That's what I do for a living. But I can just give you general information so you know if that's a roadblock, which is 90% of the time the roadblock for a lot of people for starting businesses. I want to let you know there are ways. I'm helping someone right now with a bankruptcy. So we'll talk about it more in a later episode. Thank you guys for listening to me as always. You've been listening to your boy Bookity Blinding himself, Mr. Finance. My name's Darrin Harvey. That's my government name. You've been listening to it on KGPC 96.9 FM, on KGPC969.org, or your favorite streaming podcast of choice. I appreciate you guys. Thank you, Oakland, California, for housing me as always. Thank you, listener, for coming back every episode without fail. I appreciate all you guys listening. Please give me feedback at Financial State of Minds on my Instagram. I love to know how I'm doing. I love to know how you guys think about my episodes. I love to know what you guys want to hear from me, and I will go ahead and do that. But I appreciate you guys. I'm out of here. Thank you. And yes, we're going to get more in depth with this stuff because I'm passionate about helping people improve their credit scores and helping them with their dreams of getting houses or traveling the world or whatever that is. I want to help you guys out, and I can guide you guys out, whether it's through my coaching services or just you listening to my radio show. I'm out of here, you guys. Peace, kings and queens.